Hey guys, welcome to our show, No See Feel the Market. My name's Max, and I'm actually here with our Hawaiian legend, Everson. And then we also have our master genius over here, Patrick. Don't play a board game against him because he'll kick your butt. First-hand experience. We have a great show for you today. And if you guys haven't seen our show before, this is just basically our mastermind. We have our conversation about what we see in the market, how our trades are going. We share a few tips and hints, and basically making sure that we are growing ourselves. And one day we had the idea to share this platform to viewers so we can help other traders improve just like us. This is free for you guys. We hope you enjoy this. We hope you get tremendous value. And if you do, please make sure to like, subscribe, and invite a friend next episode because we're doing this for you guys.
And
So
ask
we wanted to
questions.
get, yeah, absolutely, ask questions. And then we'll see if we can answer them and give you guys as much value as we can. Our goal is to make sure that you guys are transitioning into a more profitable, consistent trader, and that's what we're here for. So let's move on directly into what we saw last week. What did we do last week with a few trades? Hey, Patrick, why don't you start us off?
Well, obviously last week was pretty interesting. I feel like tech right now is almost unstoppable, which really surprises me. I mean, we all knew that during the Rona, tech was doing good with people staying at home and everything, but like last week when Facebook, the CFO said that the future was very uncertain and everything, and even though advertising is coming back, it's still like on shaky grounds, but nothing seems to really stop it. And I feel like also oil is coming back, not necessarily like it was 3 months ago, but oil has been pretty strong this week. And who could have predicted that a few weeks ago? Remember, like everyone,
I did.
except Everson, of course. But I mean, we all knew that we were close to the bottom. But my point being, like the demand still hasn't come back yet. So for it to show signs of strong, like it's a little surprising to me. But yeah, so that's been carrying the market this week, and that was pretty interesting. I actually had to adjust some of my positions. I had made a little vertical spread on Facebook when it was at like 190. I set a spread at 215 to 220, and it very quickly attacked it. And that's when I was like, well, yeah, tech is really trending up right now. It's very hard to go against it. So instead of going against it, I'm adjusting to now I'm selling put spreads, assuming that it's going to stay stable or go up. So that's the main thing that I've done this week. And gold and silver has been popping up, but gold has been fairly stable. So I did an iron condor around it, assuming that within the next 2 weeks, it's not going to go up too much or down too much. So that's basically what I've noticed this week.
Good. Yeah, tech seems unstoppable, but anytime you're buying a new product, it's usually going to be a tech product just because, you always want the latest thing. Nobody's going to buy a new bookshelf just because the technology's better. So that's really interesting. As for me, I'm in silver. I'm just rolling with the punches. Silver popped tremendously. It's trying to make up that difference in ratio between gold, and it's making it a lot of fun. I'm actually loving it. The only thing is I'm addicted to making adjustments, and when you're in silver, it's so boring that
Yeah.
if you make two adjustments a week, you had a very, very productive week. But let's move on to Everson. What did you see last week? How did it go?
Oh, last week was really good on the call with CEQP. If you haven't seen the last week's episode, go ahead and take a look at it. I made a call on CEQP and PXI, and they did really well. Um, as far as what I traded out with, I did a trade out with gold, and I felt like it was kind of reaching its top um, resistance levels. And so I traded out on gold. Pretty good profitability overall in the percentage. I think I was like at around 34%, something like that. So my profit is a profit no matter how high it goes up. I think that it should come down and correct itself a little bit. Other than that, I did get into a couple of positions for a short-term cycle, JD and AT&T. So we'll see how that goes.
Okay. Hey, to follow up with your gold, actually one of my clients found on his own this gold stock, RGLD, and he got in at 115. It's now, I believe, 135, and he had sold some calls, was absolutely buried. So I'm walking him through the steps on how to increase his profits through this. But RGLD, absolutely dominating right now. It's much more productive right now than GLD, which was really interesting, you know, and that's why we love to have these conversations with other traders, because you never know what you're going to learn. Now, I do know anytime you have a conversation with Everson, he's going to pop up these stocks that you had never heard before, and it's very interesting, very interesting.
No,
So,
it's out there. It's out
yeah,
there.
it is. And that's why I was asking you, like, how do you funnel down to find stocks? And, you know, the way I do it is the stock screeners. You know, anytime I'm trying to find
meditation.
Meditation,
No,
it comes to
kidding.
you. So I'm actually in the process of losing weight. I've lost 21 pounds, I think, since the first week of April. And before you guys start congratulating me, I can't take the credit. I actually bought a course. I bought a course that teaches me exactly what to do, what to eat, what to think. Yeah, it does tell you how to think, that kind of stuff.
Wow.
It's pretty intense. But I wanted to take that and show you guys that anytime we're trying to learn something, we're actually going to get a mentor. We're going to buy a book or a course, because we're always trying to learn. We're always trying to improve ourselves. And, you know, I'm sure I can speak for you guys as well. Anytime, well, today we are a much better trader than we were when we first started. But, you know, think of all the books that we've read, the courses, and, you know, we even have mentors that help us transition to this point. So, you know, Patrick, do you feel like you're a much better trader, consistent, profitable trader today than you were when you first started out?
Yeah, mostly. But before we're getting into that, without putting you in the hot seat, it's what is even more noteworthy about your journey with that weight loss program is that you've done it twice. So the fact that it's repeatable is what's most valuable in my mind, because a lot of things, you know, if you do it once, it can be fluke, but once you've repeated it and it's working again, to me that means that it's a system that's, you know, consistent, can provide results. I feel like that's even more commendable, so congratulations with that. Now, we were asking about getting better as a trader. For me personally, my biggest weakness is discipline. When I started, I wasn't very disciplined and I took on too much risk. Same thing when we play golf. My risk versus reward, Max is smiling. My risk versus reward isn't always the best. I take too much risk for the potential reward, and that's put me in trouble many times, both in the stock market and on the golf course. So that's the thing that's improved the most for me, and that I'm constantly working on, is trying to make sure that the risk, the money involved, is worth what I might get out of it. And that's been mostly, actually not necessarily through books, but mostly with talking with other people, like this mentorship not mentorship, but mastermind that we have. It really helps, talking with other traders and like putting things in perspective.
Yeah, we kind of talked about it just amongst each other. I think that, you know, just having a platform where you can collaborate is one of the biggest things as far as being able to have a mindset moving into your next trade. I think is important to be able to talk it out, and being able to have advice also, I think works both ways. You learn through explanation, you learn through being taught. So I like the dynamic of the group that we have, that we could collaborate every week and come to these terms, because, you know, sometimes there might not be something that I catch in the news or whatever that Patrick would pick up, or vice versa with you, Max. So it's good to have this mindset. Like you said, you gave me a freebie right here, the RGLD. I'm going to take a look at it.
Yeah, I mean, it might be exhausted by now, but if gold's
Right.
moving
I
up,
think, yeah.
there's definitely it's moving at a faster pace. 115 to 135, and I think in that span, GLD went up $3, which was really interesting. So I wanted to talk a little bit about our daily routine, and instead of sending a camera crew to these guys' home and then, invade their privacy, we could just discuss a little bit like what our routines are. Starting with you, Everson, sort of what is your routine when you wake up? Are you spending 17 hours doing research with articles, or what are you doing?
Well, I'm kind of sporadic with my research. I don't have a particular method that I work with, or a particular strategy that I work with. I should. I notice that when I do put in the time in research and being able to, look at programs, a lot of it has to do with being able to feel the market, which is what I think I do best, having that intuition. A lot of it comes from listening to different podcasts, listening to different news outlets, and I want to brush up with everything, soak in as much, like a sponge, right? You soak up as much information as you can, and then you make your analysis from there. So I'll look at everything from throughout the day, from politics to local news. I don't really do too much of the local news. Because for stock purposes, it doesn't really serve my purpose unless I'm investing in something that's a
Okay.
local company.
Well, tell us what time you wake up since you're all the way in Hawaii.
So
He never sleeps.
I'm usually, so I'm stuck to the mainland hours. So I'm set to the East Coast hours. So I'm probably sleeping in the morning time. If anything, yeah, I mean it's all sporadic. So sometimes I sleep in the morning time, sometimes I sleep in the evening time, or sometimes in the afternoon. But I like to, if I get the chance, to sleep in the morning time, and then I'm up. I'm up and going at least at 11. So, and I'm working all the way through 3 a.m. So 3 a.m. is when the market opens here. So I'm definitely within the market at that point. So it's stock market is my full-time job, really, and the rest is just the cherry on top.
You said you're sporadic, but you said you act a lot on your gut feeling, and so even though you're sporadic, you're still spending the time to educate yourself with what's happening, listening to other people's views,
Right.
and all that information is building up in you. And so when you need to make a reaction, your gut feeling's there. And a gut is
Right.
basically just the accumulation of all the information that you've assimilated, and then it just concentrates into one decision. And so that's where your gut feeling's coming from. So even though you're saying it's sporadic, you're still making sure that you're exposing yourself to that information, which is, like your viewers, make sure you're exposing yourself, right?
Your time commitment to the markets and to stocks should be dedicated to how much positions you have open. Or like Patrick and I was collaborating earlier before the show. If you have a lot of positions in place, or you have to step in to make a correction, you want to spend a little more time understanding the market moves and where things are going, and maybe even sell out for a loss if you see some headwind coming in that is going against the direction in which you have your stocks positioned at. So it all depends on that time commitment, but I like to on a regular basis be able to expose myself to as much knowledge as I can. Definitely.
Cool. And Patrick, what about you?
So usually it starts the night before, because I like to look at the futures, kind of get an idea of what's coming. And I like to look at it. It's not always a great indicator, but I like to look at what the other stock markets in Europe and Asia are doing, because usually there's some correlation. Not always, but sometimes, like if it drops pretty big there, sometimes it's going to drop here too. So just get a feel for that. And I try to see what happened after hours, and then in the morning before the stock market opens, I try to see what's going on in the pre-market, if there's any big news, and I try to think of which stocks I have that are going to need adjustments, and I try to kind of figure out like what I'm going to do. But usually I try to avoid trading in the first hour because, like, without getting into like myths and stuff like that, the first hour usually has big increases or decreases that aren't necessarily rational. Like, it's more people that are reacting to the news really quickly. They want to drop their stocks or so anyway. So I try to wait until like 10:30 if I have to make some adjustments, and then during the day I just read some articles. I listen to Bloomberg, CNBC, and then closer to like 2:30 or 3, I start looking at if there's any moves I can do at the end of the day, especially on Friday, to open or close options for the week coming up.
So you agree with the I think there's that saying that goes around that the first hour is the amateur hour and the last hour is the veteran hour?
Yes, but sometimes it goes in your favor too. If you disagree with the movement, you can benefit from it, especially since, like, if it drops too much, then you can assume that often it's going to go back up towards noon. And the opposite, if it goes straight up, often it's going to taper off close to noon. So usually I try to see if like I can find something that's incongruent, and sometimes I've done pretty well with that too.
You know what I've been seeing a lot is interesting that you're mentioning that is, in the suckers hour, right, which is the first hour of trading. I've oftentimes within this last week seen the gap up. If you see the gap up, oftentimes the stocks would not create new highs after that. So it would usually be a gap up, but you would see it start to trend downwards.
Yeah, tapers off.
So you call it a gap, I call it a window. And so in the Japanese candlestick patterns, when you have a window, it tries to close the window, so it will retrace. So it's pretty interesting. So that's a good signal to look for. And it's amazing that Everson and I have like completely different training. And so we use different words to mean the same thing, but we're talking about the same thing most of the time. It's pretty cool.
I think these guys are more of the smarts when it comes to it, and they probably had proper education. Mine's just like a really pigeon education. I'm very like localized.
Results speak for themselves. So
yeah, absolutely. Results speak for themselves.
I may not know how to speak right, but still yet.
Come on, you guys are pretty amazing. Great traders, and that's why, you know, people are listening to you guys, so it's pretty amazing. So let's move on. I got something fun for you guys.
How about you, Max? What's your routine?
Oh yeah, what's your routine?
You want to hear about my routine?
Don't try to get away with it.
All right. Well, I didn't feel like people cared about, you know, what I ate, you know, what time I got up. So I make sure that I'm up
no, they don't, but I do.
At 8:30, and you know, that's where I start looking at what the market's doing, the futures are doing, pre-market, and so I'm just going over all my strategies for the 3 different directions, up, down, or sideways, making sure that I'm fluent in what I need to do if this happens or that happens. I make sure that I'm there for the first hour of the market to see if I need to make any adjustments. Then I go back to do the rest of my work. Midday or so, I'll keep track and make sure that nothing unusual happens. And if I need to make an adjustment, I already know what to do because I practiced at the beginning of the day what to do. And then once the market closes, I just make sure I go over all my positions, making sure nothing unusual happens. And then I rehearse for the next day, making sure that the price would actually accommodate the 3 specific strategies that I would use for up, down, or sideways. So I do a lot more work than I should, but I'd just rather be more prepared for my position than underprepared. That's just that's the way I like to be. And so Nick Saban, the coach for Alabama, he says, don't practice a play until you get it right. Practice a play until you can't get it wrong. And so that's sort of the mentality I have in my trading. I just make sure that I'm practicing my method at the beginning of the day and at the end of the day, making sure that when something happens, I know exactly what to do and I don't really have to think about it. And I even know the prices of the option so I can make the decision pretty quickly. So now we get into this fun part. In my book that's coming out pretty soon, I talk about the 3 different types of traders. And so we could talk a little bit about the mindset, the 3 different types of traders. The first one is the Delta Trader. And to me, the Delta Trader is like the jock. This is the guy that everybody loves. He makes great money. He's going to drive a Ferrari or Lamborghini pretty soon. His return on investment is very good, very consistent trader. Um, and that's the guy that everybody wants to be. And most of the traders try to become a Delta Trader. So I wanted to ask you, Everson, since you're probably you're most associated with the Delta trading, sort of what is your mindset in terms of going into the market? Are you trying to make sure that you're trying to double, triple, quadruple your money? I mean, what's the mindset of a jock, a Delta Trader in the market?
Well, like I've said in these episodes, the past episodes, I really don't see myself as like I've spoke with a lot of different people. One of them being my cousin, and one of them a close friend of mine's that they're more, I guess you could say, Delta traders. They're more momentum traders than I am, but they move huge positions. I tend to look for those breakouts. My mentality from when I first started, and bring you back to the origin, when I first started trading, my mentality was if I don't have money to be able to, a lot of money to be able to invest, then there's no way I can move the percentages. And then I looked into the frequency of being able to, hit those target percentages or prices for myself. And so I think that method is really, besides the risk tolerance, right? As we went over before, you have the risk tolerance, but if you can create a frequency of success throughout the year, I think that proves itself worthy overall. So understanding the frequency, understanding the risk tolerance, and really, I think what saves you is your defense. And defense to me is your risk tolerance. Your aggression would be your offense would be your research. You got your research and everything. Well, actually, that'd be just a plan, right? I never had an analogy before this, but I'm going to throw in an analogy. You'll probably have one somewhere in the show too, but I kind of see that as my analogy in a football or any sport for that matter is your defense is your risk tolerance, and your game plan is your research that you conduct, and your execution is the plans that you put in place when you execute a trade. So,
well, you're talking about sports, and they say that defense wins championships, and so exactly in trading as well. Well done. And so now the next guy is the Theta Trader. And in my mind, the Theta Trader is like the geek. And he's like, well, with this calculation, I can predict that the month following June will be July. And actually, if you look at the time decay, the acceleration of decay will accelerate as we get to expiration. And
that's
so
his actual
that's
voice.
Yeah.
That's his actual voice.
So that's
This
the
is his
Theta
this
Trader.
is his podcast voice right now.
Yeah, I had to tone it down a little bit, bring it down the bass. So, Patrick, talk a little bit about the mindset of a Theta Trader, which is completely different than a Delta Trader.
Wait, are you calling me a geek?
Well, if you're a Theta Trader, then you're a geek. I'm definitely a Theta Trader, but I wanted to see your opinion on how a Theta Trader thinks.
I'm offended. Max,
Well,
I'm offended.
I'm sorry.
What I like about it is that you can calculate your risk and your reward. As I mentioned before, that's one thing that I struggled with in the past. So now when I sell an option, I know how much I can make. I know how much I can lose, especially if I have a hedge against it. And that's how I like to operate now. But it's not sexy. It's not, you don't have the big swings, the big wins, but it's more of a consistent increase in your portfolio over time. And when you're thinking about the long run, compounding those little wins, in my mind, it's more like a base hitter versus a home run king. So two different types of baseball players, both have their place on the team, but they operate differently. So my goal is to hit singles, try to steal a base once in a while, and hopefully get to the home plate.
I like it.
There's the analogy.
Like it.
You got the home run hitter and the first base hitter, and they're both really important on the team. You got to make sure you get people on the base, and then you got to make people, make sure that Babe Ruth shows up, and then he just lets everybody go home. The last trader that we have here is the Vega Trader. The Vega Trader, and the Vega Trader to me is like the hippie, and he's like, dude, man, what goes up must come down, and that's what Vega trading is all about. They truly understand that volatility is not here to stay, and it's not going to be gone forever. It will always come and go. And if you look at a stock can actually get beyond a certain price range and never get back down to where it came from, or vice versa. It might drop below a certain price point and never get back up. But with the VIX and volatility, it will always go up and always come down. And so these Vega traders, I call them the hippies just because, they're more into the true routines and cycles of nature. They know that the VIX will be high one day and it will come back down. So those are basically the three cartoon characters that I talk a little bit about in my book. But I hope that helps you guys understand the different mindset of traders. And, you find the one that works best for you and then learn how to do those techniques and strategies, because the more in sync you are with your strategies, the better trader you'll be. So I did a little bit of self-analysis lately, and I always thought that I was a proactive guy, making sure that I'm trying to predict the future and making sure my positions are okay. But I came to the conclusion that I'm actually a reactive trader. And, I have conversations with Patrick and Everson where I actually need to wait for confirmation. I need to wait for data to show up in the stock before I act on it. So I'm a reactive trader. I wanted to hear if you guys could do a little bit of self-analysis and see if you guys were proactive or reactive. Now, I make sure that I plan my 3 strategies for up, down, or sideways every morning and every night, but I don't act until something shows up in my chart and the price action moves. So, Patrick, do you feel like you're reactive or proactive?
Well, traditionally, I was mostly trying to predict the future, kind of Everson was talking about a little bit earlier. I mean, I'm big into news and everything, so I've always tried to figure out, well, what's going to happen in the future based on where we are now, and make predictions and act upon it. But lately, I started to change my position to mostly because of Max's calling every show. He's been calling the trends pretty well, and you look throughout the week and it tends to confirm it. So I started shifting my way of thinking a little bit, where obviously I'm still going to look for long-term trends. For example, when I was talking about tech and how it's going to affect business, not just during the pandemic, but later on, how some of the trends are here to stay, basically. But at the same time, it's good when the charts confirm what you're thinking is going to happen. So, for example, just a quick, specific example, when we're looking at GLD, which is what we use to trade gold, basically, there's resistance at 164. So I'm above the resistance in my position. But if it crosses 164, well, I'll adjust it. So in the past, I would just have tried to predict if it was going to reach the level that I'm at. But now, using kind of like what Max has been talking about during the show, I'm paying a little bit more attention to the trends and what actually happening right now in the market, as opposed to just trying to predict it.
Wow. All right, that blew me away, Everson. What are you, reactive or proactive?
Um, I think I'm like you, Max. I think I'm reactive. I try to be proactive as much as I can. I notice that sometimes when I'm proactive, I'm a little over proactive. I'll give you I'll give you a case in point. Well, let me think of a good one. It's like the waste management. Let's just say. Uh, I waited around on waste management about two years ago, or maybe a year ago. Uh, I waited around for the price to get to where I wanted it to, which is roughly around $100, $120 per share. Um, but I was too early in that stock, so I waited almost a whole year. Amazon was the same thing for me last year, where I waited around for Amazon for an entire year, and it hadn't produced very much. But within the last few months, I think it's gone up quite a bit, reaching new highs at one point even. Um, so there's some times where I see something and I feel strongly about a particular stock, and I'm just in too early. So in those cases, I'd have to just adjust myself accordingly. But it never gets to a point where, for me, where I can't come up with an exit strategy, because like I said, your defense is your greatest weapon. So when you have that in place with your risk tolerance, then even if you come in too early, as long as it's a pretty good cyclical move in a stock, then it's going to go in the right direction regardless. So yeah, that's sort of where I am. I'm a hybrid when it comes to that, but I've been more reactive than proactive recently.
So to be honest, doesn't being reactive sound worse than proactive? But it's working for us. So when I discovered that I was reactive, I had to understand that it is a good thing. So if you guys, if the viewers and listeners are out there and are like, wow, I'm actually just reacting to the market. Well, you have three guys here that are basically agreeing that, that's the right way to do it. I mean, you
Well,
can
it's
try to
sort of
predict
hard
all
though.
you want in the future, but like Everson was saying, he might wait a year for something to happen.
But it's sort of hard though. How do you become proactive in an unsure, unstable market? I mean, I'm pretty sure that a lot of us at this point right now, we're pretty much just reactive. A lot of us, because to be able to see expansion at this point, to be able to see, you know, any significant growth moving on to the rest of the year, or maybe even the first or second quarter of next year. Um, we're going to see shaky grounds. We're going to see instability and everything for the time being. Uh, it, I, I mean, it is what it is. There's some stocks, like I said, your cyclical stocks that you could probably get into that uh, would give you that mindset to be able to move forward and be proactive. But there's just so much, questionable uncertainty moving forward that it's hard to be proactive.
But at the same time, how do you manage being reactive but not being too late to the dance?
So my theory is that if you're being reactive, your batting average is going to be higher, but your return on investment will be lower because you're going to be a little bit late to the movement. It's just that you're going to be late to a movement that's going the trend that you want it. If you're proactive and you're too far in the future, you might wait for a long time for a specific position to accomplish what you had predicted, but you might have been wrong too. So your batting average is going to be significantly lower. It's just when you hit a home run, it's going to be a home run. And that's sort of the way I see it. Did that make sense, Everson?
Yeah, no, it makes perfect sense.
So it's sort
testing
of,
testing support levels on lows and testing resistance levels, as we know it as investors and traders, is one way where we have learned to identify whether a stock has reached its bottom or whether a stock has reached its highs. And I think that's a significant lesson for those new traders getting into the market, because one question that I had when I first got into the market was, how do you know when it's too high and how do you know when it's too low? And which, I mean, you could say a lot of stories about this topic, but for time purposes, I won't go into detail. But obviously, reach out to coaching for detailed strategy on those.
Yeah,
we both have, or we all have strategies on how to position ourselves with those lows and highs.
Yeah, because some people use tools like, RSI, Bollinger Bands, and you name it.
Right.
There's all these tools out
Absolutely.
there, and you can just flood your charts with all kinds of tools that actually can mislead you. Let's say a stock is just going up, and on the RSI, it says, this stock is way overbought right now, and you're waiting for it to come back down. Well, if you guys have experience with the RSI or Bollinger Bands, you can see price action getting stuck in that direction for a long time.
Yeah.
So just because the RSI says, hey, this stock's overbought, doesn't mean it is. It doesn't really measure the full momentum of that move. So there are specific ways, and I always wait for that confirmation. That's just me. So I wanted to talk a little bit about what are you guys seeing next week? I mean, we keep seeing the unemployment claims going up every week, but the market doesn't look like it cares about it. So Patrick, do you see a separation between the job data versus the stock market?
I mean, we're living on hope right now. I'm still skeptical. I mean, I just can't shake the fact that I'm skeptical and that it doesn't make sense to me. But the having the government basically say that no matter what, they're going to bail you out and pour tons of money into the market, buy bad debt, like they created special entities to buy a debt. To me, that puts a backstop to how far we can go down again. So next week, I just expect it to. I don't know how quickly we're going to go up, but I don't expect massive declines, and that's what I've changed in the past few weeks. I mean, I'm still very skeptical, but if oil can go up right now, almost any stock can go up. But I'm very curious what's going to happen, because next week is supposed to be the expiration of the contracts, kind of like what happened last month. So I don't think it's going to be as bad, but I'm curious to see if there's going to be some aftershocks.
For new viewers, if you missed that episode about oil, Patrick gave a great explanation. I believe it was episode 8, and he sort of went through the future contracts of oil and how USO was built and how it affected the whole market. But now let's talk to Everson and see. And I also want to add, Everson, to the question that I asked Patrick about the separation between the data and jobless claims versus the stock market. I also want to ask, how do you feel about this increase in inflation year over year, up 10% in grocery store goods?
Yeah, I mean, moving forward, I think that it really makes a significant difference as to where we are in trade. I think trade will either make it or break it to find out where we're positioned. And then also regulation, right? When it comes to inflation of any kind, it's usually a trickle down effect, because although inflation will affect us all, the true cost comes out of where we are in trade with foreign entities, right? Because they're the ones manufacturing the products and whatnot, and where we are with regulation. We knew it through previous administrations that overregulation moves businesses out of America. With that being said, when companies move outside of America, we run the risk of having technology stolen, copyright infringements and whatnot. So it does change the platform in a long period of time, I think. I think as far as the inflation on the short term, on a short cycle, maybe we wouldn't feel the pinch right off the bat. But I think in a long run, should we go far off the bandwagon to say, we could incur more loss moving into the future. Policies matter when it comes to individual states, and cost matters when it comes down to individual states. But I think to tackle that question is to tackle those two that I mentioned. I did want to mention too, and I think this would be a good segue to get into it. On MSNBC, I've run across an article online that said that India was looking to lure more than 1,000 jobs, U.S. jobs, companies out of China and into India. And this is a working relations that they were trying to do for a very long time. What the deal was, I'm not sure, but it seems like, both President Trump and the Indian president, I don't know how to say his name, I do apologize, but they both had a pretty good working relationship over the years. And, the fact being that 1,000 jobs moving out of China, that's a significant amount of jobs to be moving out of China. So it would only make sense as a country or a nation for you to be concerned when, good American jobs being moved out of one placement and moving into a whole new country. Both about a billion strong, roughly around the same, right? Maybe off by a few million.
About 1.5.
Right, but generally in that same vicinity. It's my understanding through our collaboration, Max, that the cost might be a little more, but I think the big difference is, regardless of the cost, is how the deal was worked through. Because as we know it through real estate, money is made on the deal, right? So if I acquired a house, and this is going off subject, but I think it's an important lesson. If I'm buying a house at pennies on the dollar and I flip it for profitability, I've made money in a short period of time because of the deal that I made. Yep. So I think it's important to understand that sense on a more macro level instead of a micro level, and looking at how does inflation affect me individually, or us as citizens individually, and take it to a macro level and look at what can we do from the trickle down effect works because of that. If we focus on the top down, if we fix what's happening in at the top, then we can trickle down to fixing the problems below. And we've seen that with the economy in the last 3 years. So
those were really good points. And Patrick, did you want to add to that, both for the rise by 10% in inflation for consumer goods, and also our relationship sort of switching from China to India?
Well, about inflation, I mean, I've talked in previous episodes that I'm a little bit more concerned about deflation. Groceries might go up, but with the price of gas down significantly and a lot of other parts of the industry going down, I mean, we're more concerned about deflation right now. I think that the Fed has touched negative rates this week or something like that. So we'll have to keep an eye on that. As far as the relationship with India, their infrastructure isn't up to par yet, so they'll have to really develop it before they can compete with China. But one step at a time, maybe they will. I'm not sure yet.
You know what I thought was really funny, and this is just a thought that just came to my mind. But if we had a beef shortage or a meat shortage, right? It was said, and I'm sure that in parts of the country we have one of those, but we're not seeing it too much here, I don't think. I went to the store a few days ago, and we had ample supply of the meat products because individual states start to take care of their own, I think. But what was interesting to me, and I went into a Safeway, was that where we would normally have Tyson products, they had to quickly look at different vendors. And, Arkansas is a state that hadn't shut down. There's no real lockdown in Arkansas. As you know, it's a Republican state. So guess where all of our meat products are coming from?
Wow, that's interesting.
So it's coming from Arkansas, and it's actually cheaper from Arkansas than it would be buying Tyson products. So, I mean, and there's a lot more content too. So per poundage, at the discounted rate that it was at, I think it was like for Hawaii, pounds of chicken going for $6.99. That's actually a pretty good deal. Normally Tyson's would be about $8.99 to $10 and on up for smaller bag. So we have high cost here naturally. So for it to be at $6.99 was just a steal. I don't know why it's not flying off the shelves.
Reminds me of Canadian prices, but not in a good way.
Yeah. Well, so we're seeing some inflation into grocery stores, and I truly believe that it's going to go across all markets. Why? Because we flooded the market with a lot of money, and when you do that, you're going to experience inflation. So a lot of people are going to increase their cost, and so it's going to cost a lot more money to buy the same amount of stuff. And your dollar's losing value. That's a big reason why I'm in silver, just trying to make up that purchasing power. So that's all the time we have today. Today was a phenomenal episode. You got to see all kinds of information. My three little cartoon characters, Everson gave some great information about the relationship with the U.S. and China, and Patrick is giving us some great lessons and analogies as well about sports and relating the difference in mindset. So I hope you guys are enjoying our show. Click like, subscribe, sending us a message, questions, whatever it is. We're here to help you and guide you along your path to become a more profitable, consistent trader. We love you guys. We enjoy all the conversations that we've had with you guys. And we will see you guys in the next episode. Talk to you guys soon.